Hello, everybody, and welcome to another YouTube video. My name is Ina Holvoet. I've been in the crypto industry for over 5 years, and my specialty is technical analysis. And that's what I'm going to do with you guys today because I get a lot of questions. People asking if this is the right time to buy. They're unsure. They don't know if the market's going to drop more or start running from here. So I'm going to check all the charts together with you and see what's up. I'm also going to talk about a special indicator so you can use to see whether or not it's a good time to buy or sell. And then I'm also going to check the USD and the financial world a little bit to give you a little bit more perspective about where the world is going and in what phase we are. That is important because in 2017, the US dollar dropped a lot when the bull market was happening. That also happened in 2021 when we saw Bitcoin risen from 5.5K to 67K. So it is important to look at the dollar sometimes when you're in cryptocurrency, but that's for later. Let's dig in. I'm going to share my screen and let's go straight to the charts. This is something I've been looking at for over 5 years. And it's just always so interesting that these markets move in patterns and these patterns keep existing and keep coming back. So it is very important to look at the patterns and take them for as they are. That's what we're going to do today. Okay. This is Bitcoin. So this is the Bitcoin chart for people that don't look a lot at charts. Every candlestick, we call them Japanese candlesticks. Every candlestick you see is 1 week of data. If I change it to a day, then every candlestick is 1 day of data. Okay. If we see it in a long-term perspective, here you see 2017, the drop, 2019 here, the drop with Corona, and then we were flying 67 right here. Voila. 68, pumped till 69. And then it went all the way down to 16K. And it might scare you because it's a very scary market. Because one day you're at almost 70K and the other day you're back at 15. So it is very important to play at the prices and at the right prices. And today I'm going to give you a little bit more insights. Okay, so we saw that we dropped for over a year and that we made this low. How do I know that this is like a bottom, like a steady low? Is because it is similar to other lows that we've seen in the past. This was 2019, a very boring period of time, but it's a quite similar pattern. We draw down and then we have this bottom formation and then we go up from there. So this is what we see here. We see that the market drops, market loses touch with the high prices and it really can't hold it together. And from there on, we made a decent downtrends. We see that this downtrend is very valid and been touched on a weekly basis for it to break and retest here on the 16K. And then we went up from there. And now we are right here, okay? A lot of people are a little bit scared that the market is going to drop more, but the cool thing is that we officially can draw a trend. So a trend line underneath the chart that is supporting the uptrend. And there we see that is steady and nice. It even has some place or some room to retest this line, okay? You can play with it a bit. Mine is not perfect. It will never be perfect. And that's technical analysis. But I have the insights of the market is moving into another trend. And that's important to get, okay? Let's analyze the candlesticks here. We had a major pump 7 weeks ago, then 3 weeks steady, 8 weeks ago, 3 weeks steady. 3 weeks, there was a lot of movement, and this week we are here. We are Wednesday, the 3rd of May, and the candle is not closed yet, of course. What I saw is that the market tried to move up, but bounced onto this resistance, and I'm back to underneath support. So that's what's bothering me a little bit. What I can see is that the market is tending to go here and seek support on his trend line. Okay, so trend line is always supporting the market. And if the trend line breaks, that means the market is not supported anymore, just like you saw with this downtrend until the retest of 16K. So right now we are in a little uptrend, but there's still a lot of boundaries ahead. What you can see are these green zones that I drawn up to my chart. And by these green zones, it is important to see that there is always a risk involved. The green zones, as we zoom out, have been always a point of relaxation for the market or a point to break through and retest. Right now, we pointed at the 30K, and the 30K is a very important zone, of course. Unfortunately, we could not hold that price, so market had to bounce a little bit downwards just to take a break, just to have some rest, okay? It is in the chart's nature to seek for some rest. So it is normal if the market doesn't shoot up like you see here. That's only very exceptional when there's a bull market playing. And that's something I'm not seeing here. So don't get your hopes up for another bull run just yet. What can or will maybe happen is that the market will tend to reach more of these levels. As you can see, we have over 10 levels ahead before market can break its all-time high. And I just don't think the market is strong enough. Why do I think that? Is because in the past, there was a lot of hesitation before the market could go up again. And when it did, it had to see confirmations downwards. So that's what I think is going to happen for the coming year. Now this summer, the market will try to reach new heights, reach good heights, not new all-time highs, but just good heights after this long and almost unbearable downtrends. Now it is like seeking for a little bit of breath, a little bit of peace before the market can drop a little bit again. Do I think we will still hit the 16K or lower? No, I don't think so. I think these times are over. You had your chance to buy. I think you should check 25K if you still want to have a decent price to buy your Bitcoin. But I don't think we're going lower than 16,000. That's also something I mentioned in my free training. And I'm going to put the link below under this video if you want to know all about this free training and all about the teachings that I do to teach you how to do your own technical analysis. But okay, let's move on. So we have this trend, and so we see that the market is struggling a bit. What do we need to see is that we pass with comfort the zone of 30,000. We have to go over the zone with comfort. That means big candlesticks, a big green candle, and then we can move up. Personally, I think the 48K would be a very nice price to bounce for Bitcoin. As soon as we hit the 48K, I think the market will start a little bit to have trouble, and then the market might break and go down again. But that's just my perspective. That's just what I think. And let me tell you exactly why I think that. Before I'm going to dive into my whole conclusion, I want to show you the tools that I use for to project the market and to put the market in perspective like I did now. So let's look at this first one that is called the RSI, or the Relative Strength Index. For people that are already like traders or already are like doing technical analysis, this is probably nothing new, but it is important to see how this RSI, or how this indicator is always playing out at the same way. Okay, so we have this purple line, and this purple line is the strength of the markets, the relative strength index, right? So this strength always indicates whenever a market is oversold or overbought. So actually it's saying where the market is exhausted in its strength. Like for instance, here, it was super exhausted going down and it had to go up again. Of course, it took some time for the markets to find some peace, because this is on a weekly basis. This is very long term. It took some time, but it's always going to play out in the direction, in the other direction. So if it hits over 30, so we have these two zones. We have 70 and we have 30, right? That's the purple zone. Above we have 100, 120, to 0, -20, and so on. but we always look to the levels between 70 and 30. And whenever it comes close to the 30, it will tend to go up again, close to the 70. When it hits the 70, it will always tend to go down, okay? We also have this very important line, which is the middle line, and that is around 50, of course. It's the middle line, and it will always tend to see comfort on this middle line, just like you saw here with this bounce back, with this little weird candle you see here. This doji was hitting all these levels. It had to retest, okay? That's what a market does. It goes up, it leaves the zones, but it always retests these zones, and that's what I'm a little bit afraid for, that this 25K zone, 25.5K zone must be tested again, as it is or was a decent resistance, and now it didn't test as support. So let's see what happens with that. The market will always come back to the point to finish something in order to start something new, right? That's what we also see with the RSI. So the 50 is the middle line, and it tends to always retest there or hesitate there. As we zoom out, you can see that this is a very, very accurate zone. If we look to the previous all-time highs and all-time lows, it was always around, it was always around this 30 zone here too. And the cool thing is with Bitcoin, if you look at it, that except for the beginning, it never hit it that low. See, it was around 25, and that's something that never happened before. So the market was way oversold, and it had to turn. And that's why I called this moment of 16K the bottom. This is where you should have bought. If you did it, congratulations, you're a rock star and you really know how to pick your prices. For the other people that didn't buy yet, it is absolutely still time to buy. And I'm going to show you that in a second with another indicator. But for now, that's what the RSI does. The RSI has also some exceptions where you can see that the market is turning around. So it's called a divergence, and it's not that hard. It's when you see at the charts from high to higher or from low to high. See, this is like, this chart goes from low to high, right? Because this point is higher than the previous points. If you look at the exact same timing of this chart, we could see, like the chart on the RSI, you could see it goes from high to low, okay? The market was losing strength around that 69. So it was losing strength, it was weakening, and it's very nice to see these things in the RSI. Of course, I'm doing this on a weekly basis, and it's going to take a long time for this to play out on a weekly basis, but you can also go to the daily chart and try exact the same thing for the daily chart. And you're going to see that there's a lot of divergence to be found, and that there's a lot of momentum within these zones wherever it hits or breaks the 70 levels. Okay, so what does this actually mean? I mean that whenever the market goes up to the 70, there's a more or higher chance that the market will go down in order to seek rest. If it hits 30, there's a bigger chance that the market will go up in order to seek a new momentum. Okay, on a daily chart, it can be messy, but it is best to use it on a weekly chart, especially for long-term investors. There it is very, very visible of how the market can turn out. Right now, we did a very heavy run in terms of strength, in terms of volume, and the market might tend to weaken a bit to retest maybe this 50 zone. And if you look at it, it might retest to 25.5. So let's see if the market really does that. Okay, moving on. This was the first indicator I wanted to show you guys. The second indicator is this Bollinger Bands, and it's one of my favorite indicators. I absolutely love it. It is such a good parameter to measure the market and the comfort zone of the market. So, okay, let's dive in. I'm going to explain you what this is all about. The Bollinger Bands, as you see, forms a cloud around your charts. It shows you whether or not the market is again in its strength or in its weakness. This Bollinger Bands is a 20, so that means, you see the 20 right here. So that means that this is the comfort zone of the last 20 candles. It is an average of the movements of the market and the comfort where the market is finding itself in. Okay. Sometimes the market has a lot of comfort, just like you see here. Sometimes the market has very little comfort, like you see here, here, and here, just recently. Okay. How the Bollinger Bands works is actually quite simple because I just explained the RSI. It is quite the same. So if the market hits the Bollinger Bands above, then it's going to seek comfort downwards at the Bollinger Bands. Again, when it hit it downwards, it's going to seek comfort on top of the cloud, on top of the Bollinger Bands, and so on. A very important tool is also this middle line, this orange line. And this is, again, just like the 50 on the RSI, it is the comfort where the market tends to retest. So whenever this pumps and breaks, it's when I retest and find comfort on the middle line. Okay. There is, though, an exception for the Bollinger Bands. And with every indicator you're using, there are exceptions. It's just like with language. It's stupid, but it's there. And it's cool because once you see and once you know, you can do a lot of things with it, right? So first of all, let's seek the best example possible. Okay, right here. And it is important to understand that the market has three phases, okay? We have the downtrend, like you see here. You have the uptrends, like you see here. But you also have consolidation, like you see here. I'm a great drawer, I know. It's just beautiful. But you have three phases, okay? Up, down, or sideways, right? So whenever the market goes up, moves up and down, the cloud will be wider because there's a lot of movement, because there's a lot of volume. Whenever the market starts going sideways, that's where it gets interesting, okay? Consolidation is a preparation of the market, and it's prepping itself for a bigger move in order to gain strength, okay? So this is what we see here, right on this beautiful uptrend we had in 2019, a major long. This was like 15 weeks of just nothing, and then suddenly we had a breakout, okay? So the Bollinger Bands got like broken because you see this gap here. I call it a squeeze. And whenever the Bollinger Band squeezes, just like here too, whenever it will pick a side, it will lean into the Bollinger Bands in order to keep following that side. And it's going to use the upside in this example of the Bollinger Bands to keep his movement upwards, like you see here. It doesn't get like, it doesn't loosen up, like it keeps sticking to that side. Something you see here too in a less accurate example, but it's just the same. It keeps sticking to that side of the Bollinger Bands, and it's just leaning towards downwards, and it's just leaning towards this this edge of this Bollinger Bands. Another example is right here. You can see this dent again. The squeeze is there. The market is a bit consolidating, a bit unsure. And then we use the upside of the Bollinger Bands to buff, ching, 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 go, to go up and form this beautiful uptrends. So this is a very accurate example too. Let's go to another example. It's like here you see this squeeze. So the Bollinger Bands falls, the market falls on top of the Bollinger Bands. And then we have one more example, and it's right here. And this is very exciting. It is making this dance. And it took a while, but it is reversing and it is leaning towards the upside of this Bollinger Bands. So I'm very excited about this. This is good news. Just have to be patient enough to see how it plays out. For the people that are holding and looking to sell, just hold your horses. I think there's more opportunities coming this year, but September could be a roller coaster in terms of like the financial markets. So I would look at de-risking from 37.5 40K, something like that. If you want to de-risk, of course, if you're in profits. If you bought Bitcoin at 60K, you're going to have to wait another year and a half before this actual bull run comes up and the market starts running. Because I think, yeah, I think it could be like very much that the market goes to 100K and above. We just have to wait and see if it plays out, because it's never sure. The only thing is sure is what is and what is not. And today we have an uptrend, so that's good. This is today, and you can never know what it's gonna be in 3 months. There are predictions, and I'm also following predictions, but that's why I love the charts. It's a yes or no, and you cannot see into the future. But like today, it's an absolute yes. So that's good, and that's what I love about technical analysis. Okay, one last thing I really want to show you is the Fibonacci retracements. It's something I do to see where the market is coming back to after it fell or after it got up. So what do I do is I take the highest swing body to the low swing body, and there I see that there's 3 levels of very importance. So we have the 0.5 right here, the 0.61 and the 0.78. These are natural indicators of a strong level, okay? We see that the 78 and the 61 is in between 2 levels. So it's in between 45 and 48. And the 78 is harder to reach, and it's between the 53 and the 56. One is straight there, and it's a 41, and it's 0.5. So the market is drawn to these levels. As soon as the market flips sides, like it did now, from down to up again, it's going to try to reach those levels who are very important to him, okay, in order to gain enough strength to go back down. Because people see this as a human experience, like, oh, if I go down, it's not that heavy, but up is like difficult. For the market, up and down is as difficult as up and down. There's just no difference. So if the market is going down for a year, it needs to gain strength, okay? And these are natural indicators who are deciding whether there are like natural points for the markets to return to. The most important ones for me that I pay attention to is the 0.5, the 0.61, and the 0.878. Okay? Very important. So again, these levels are there. It's very important. I think it might not hit the 78 because that's a very high retracement level. But I think the 0.61, as it is my favorite, is very accurate. And there is, right there it is, the 48. So I think that could be a very beautiful price until like we could hit that in August, end of July. It's not a long time anymore. Like in 3 months, we should like go there and retest this beautiful downtrends. Okay. What I wanted to show you for the guys that are still doubting, should I buy, should I not buy? I love to go back to the basics, and this is the rainbow chart. As you can see, this is a parabolic graph, so it's a little bit different at the graph that we just looked at. It's a parabolic, so that prices are differently indicated. 500, 1,000, 5,000, 10,000, and so on. It is so here you can see that we are in the purple zone, and it's actually not indicated. So the blue zone is basically a fire sale, and we are in this purple zone, and it's not even indicated. That means we are in a super, super, super low market. If you're doubting to buy, this is the best indicator I can give you. This is just sales, and we don't even realize it yet. Next year, we're gonna be there. Bitcoin may be at 150K, being like, shit, I could have bought at 30K and could have had a times 5. So this is your opportunity. I don't want to promote Bitcoin. This is the same thing for every coin. I'm just talking about Bitcoin because it's quite similar with how other coins are moving, although Bitcoin is a little bit early and the other coins are not just there yet, especially if you're in this little altcoins. But it is right there, guys. It is basically a fire sale. So this is what I wanted to give you as an extra. Of course, I have a lot of more things to talk about, but I don't want to make it too long. I want to know what you want to see in my videos, what you want to learn about technical analysis. Is there something you get? Is there something you don't get? Tell me, hit me up, let me know what you think about this video, what you think about the indicators I'm using. If you have something to ask or something to add, please add it into the comments and give me a like if you like this video. As the last, we are gonna check the US dollar indicator. So that's the DXY. And the DXY is a very strong indicator for if we are in a good, healthy economical situation or not. So we had a lot of inflation, and this inflation made sure that the market kept going up. So this is how strong the dollar is. And right now we broke 3 trends. Okay, you see this uptrend here, the uptrend here, and the uptrend here. Uptrends and trends in general are very respected in technical analysis. It is one of the most important indicators for the direction of the market and the decision if the market is going to move forward or not. So you can see that this trend has been broken too and have been retested. Let me remove that. And that we are very, very weak still. So this market has not stopped dropping since September 22. And that is right here, a beautiful downtrend again. Okay, so we are in a downtrend. That's good. That means that the cryptocurrencies still have an opportunity to grow because whenever this market is dropping, cryptocurrencies tends to rise. Okay, this is this is also like a kind of a divergence. It's like they stick together, but in the opposite way. So if this is dropping, crypto goes up, and the other way around. I just indicated that in 2001, 2020, 21, the bull run, the market of dollar was also dropping tremendously, and we had the same drop here in 2017. Wait a minute, 17? Yeah, that's right. That's when crypto pumped too. So it is very accurate. This is just very, very accurate, and it's just beautiful to see how it plays out. I just hope we can fall until here, gain a little bit of strength, and then fall more, because I think the dollar hasn't seen his darkest nights yet. Okay, guys, this is it. So it's good news for crypto, good news for the people that still want to buy. If you have any questions, please drop them into the chat box or to the comments, and I will see you soon. Bye.